Welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about the great reopening trade 2.0. Is it an opportunity to get back in on this? It was one of my great regrets of my trading life is that I was not in a great position to be, unfortunately, taking advantage of that flash crash we saw in March of 2020. I was like 3 months into my first job after graduate school, so it wasn't a great time, but we'll see. Maybe now will be another chance for me of redemption.
Fair enough. So if you like this kind of entertaining stock market content, we're just two stupid guys trying to figure everything out in the stock market. So give us a like and subscribe.
All right. With that, we'll get to it.
Two Stupid Guys Trade Stocks.
I love that so much.
What's that?
I love that so much.
I know, right? So for those of you who are unaware, the background here is actually the daily 7-day average case count for COVID-19 cases in the United States right now. So we're climbing back up there. I'm optimistic. Maybe we're starting to see a little bit of a hockey stick here at the end, and might be getting ready to trend off. We'll see. I don't know. It's a thought, maybe. But that's what's going on here. You're seeing this. So, are you familiar with this graph at all, Dylan? No. So do you remember like a while back where there was like all these talks about like India and how COVID was like just destroying them, and how like the crematoriums were just like piling up with unfortunately passed away individuals from COVID and that sort of stuff?
I remember like they were like people were like buying oxygen on the black market and stuff.
Yes. Yeah, exactly. But then it just crashed. They don't talk about this a lot. The number of daily COVID cases in India dropped by 90% from peak to the current level. Like, what do you think India did to get this?
Vaccines?
No, it wasn't vaccines. The vaccination level in India is like 4%.
Oh, what did they do?
Yeah, nothing. It crashed on its own.
Oh, that's not expected. That's not the answer I thought you were going to say.
Yeah. I mean, it's a respiratory virus. They come in waves. If it can't find enough susceptible hosts that are not naturally, will just drop off as it's running into people that it cannot infect, and then it will simply kind of phase out. Same thing you saw with the UK. They're down to half their peak. Not quite as dramatic, and UK is actually one of the most vaccinated countries in the world. I think it was like 76% or so of their adults are vaccinated at this point. Yeah, but it's
steady decline.
Yeah, steady decline. So these are the kind of headlines you're seeing. This is from, I think it was Fortune magazine. Delta waves in India and the UK have already receded. Could the same thing happen in the US? All right, that's the question. We don't know. And then this is a kind of a study where they had looked at why COVID cases crashed in India, and they did like a random sampling of people in India and to see if they had antibodies against COVID-19, and 70% of the people tested in the study did have antibodies against COVID. So yeah, it appears as though it ran rampant throughout the whole country, and unfortunately, it's inflicted a lot of damage, but that damage was relatively short-lived. This is a country, like I said, that had only about 4% vaccination rate. So you're talking about the U.S., which has got like more of a 60% vaccination rate amongst the eligible adults. So to get this to the same degree, I think would be a little more challenging. This was another little quote I took from that Fortune article, but talking about how England basically took a gamble as the Delta variant was taken off there, and they reopened.
Wow.
Yeah, right. But same trade-off. You saw that the virus kind of like moved at a very rapid pace. Once again, I'm not an epidemiologist here. Just play one on YouTube. But the whole concept is that yes, it's certainly going to unfortunately affect a lot of people, inflict a lot of damage. But this worry that it could be trending back towards a March 2020 like lockdown is, I think, overblown, I would say.
Okay.
So, we brought back some of our old friends. What sort of companies were presented with buying opportunities during this entire like kind of COVID pandemic, and where can we put some money to make some money, some return here as the market reopens.
So you're trying to take advantage of the fear.
Yeah. Yep. Mm-hmm. Yeah.
Nice. Respect.
People talk about that fear, uncertainty, and doubt, and to me, that smells like money sometimes.
There you go.
Yeah. So this is, I pulled up a nice 2-year chart here of Carnival Cruise Line. Yeah, this is, pre-pandemic. This is that, dramatic March sell-off, and you saw like a rebound here. I actually owned them right through, I forget exactly where I purchased. It was somewhere in the low teens, and I sold out around 20 or so once the first, mRNA vaccine was announced. Since then, it's traded sideways, I would say, in a channel. The one thing that I would caution you about is we're going to go into on the next slide here is that, this doesn't tell the whole story. You can't just say like, oh, it was a $45 a share stock before the pandemic, and it's only a $22 a share stock now. It should double from here. That's not the case. So the company had to do a lot of things to survive last year, which I completely respect, right? The revenue went to basically nothing. Maybe if someone's selling a Carnival Cruise Line T-shirt on the website, that's probably about the most revenue they generated. They had to dilute a lot. They sold a whole ton of shares. They basically sold a couple 100 million shares.
Some at some bad prices too.
Yes,
there was like the first one was at a really bad price. I can't remember the price. It was real low.
Yeah, I don't recall either. The other thing too is they had to go out and they had to borrow a bunch of money. This is denominated in billions of dollars. You're talking about they're tracking around a little under $10 billion, and now they're over $20 billion in debt, unfortunately. All right.
So double the debt, and they diluted a bunch, right?
Yeah. So, there's this thing called enterprise value. Enterprise value, the way to think about it is, imagine like your house, right, Dylan? There's your home equity, the part that you truly own, and then there's the mortgage, right? You add those two pieces together, that gives you the whole value of the home, right? And when you talk about a business, that is the enterprise value. So you're adding both the debt and the actual equity, which is the per share, the number of shares, kind of outstanding, to give you your enterprise value. You also can subtract cash as part of this too, right? So this is actually from our previous video on Carnival Cruise Line. I can link as well. And read through the numbers. They had $9.6 billion in debt. They had $518 million in cash. It was selling for about $45 a share. I didn't want to give them right their peak, but I gave them kind of like, a good baseline share price before the pandemic, which I took from November of 2019. And they had 692 million shares outstanding, giving me an enterprise value of about $40.5 billion, right? So this is Carnival Cruise Line today, all right? $25.968 billion long-term debt. Yeah. $9.2 billion in cash, because that's where that debt and those share sales went, is into their bank account. And then we have $22.86 a share currently, and 1.1 billion shares outstanding. So that's over 400 million shares that they issued. So an enterprise value calculation right now gets at about $42.9 billion, unfortunately, for Carnival Cruise Line. So it doesn't really represent a significant margin of safety, in my opinion, even at this current share price, unfortunately.
What share price do you think would be the...
I'd have to continue doing some more math, but I think we'd have to get down into like the mid-teens, unfortunately, before I feel like I'm being compensated well enough for the uncertainty, given the current market environment.
My magic number in my head was 15.
Yeah, I
they
think
had a bunch of resistance around there.
Yeah, I think that makes good sense, honestly. Sadly, it didn't work out. People love talking about investments that are like grand slam 100x opportunities. Unfortunately, I try to run the numbers, and I'm doing this for my own investment. Whether or not someone else cares is entirely up to them. But this is another company I wanted to look at here was Las Vegas Sands. So 2-year chart here, you're talking about it. It's pretty much hitting the same level it was before, right? In terms of the stock chart. Now, what do they have to do to survive the pandemic? Obviously, the revenue went down significantly. I think they were up to around $13 billion per year, down to like $3.7 billion per year. So they were still generating some money, better than Carnival Cruise Line, at least there. They did have to issue a whole ton of shares in order to kind of do it. I'm sorry. This graph is going back quarterly. So in reality, this right here is a portion that represents COVID. So they really didn't have to issue a ton of shares. They did take on some debt, but not a significant amount. You're talking about a couple $2 billion in debt additionally. So I think they're certainly one worth kind of digging a little bit deeper. I'm still working on my enterprise value calculation on them, but I just had to do this more as a baseline of which companies merit deeper kind of valuation, and show you also how to do that enterprise value calculation with the Carnival Cruise Line example.
I'm a little late here. It took me a while to find. Carnival did do a share offering at $8.
Okay. Yeah, I knew there was one that was sub 10, but yeah.
It was a lot. Hence the massive debt and not a lot of cash flow after it.
Yeah. Very unfortunate. Is this one of your favorites right here, Dylan? You remember grad school flying back and forth in Southwest all the time?
Every month. Yeah, it was a great, horrible time.
Yeah, right. It's like a bus in the sky. So if you notice that a lot of the recovery stocks have this similar kind of shape to the trajectory here. This is basically the Delta virus hump.
Yeah.
The Delta variant hump. But they've kind of established like a new baseline here. Unfortunately, nowhere near their pandemic lows for them. But what do they have to do to survive the pandemic? So revenue was obviously down significantly. Not surprised there. They did have to issue some shares. Nothing too crazy though, comparatively. They
that's not that
20%
bad.
increase. Yeah, they did take on a fair chunk of debt. They're talking about a company that was about $2 billion in debt prior to the pandemic, and then now they're up closer to $9 billion in debt. So they took about $7 billion in debt.
That's a lot.
Yeah, another company worth running the numbers on, I would say. WYNN, another one that you saw. Obviously, Vegas.
That looks like Rivendell.
Yeah, I mean, it's beautiful. I wasn't quite sure if this is like a computer generated image. I think it is. I don't know. I've never been to Vegas, but it's either got more Photoshop than Kim Kardashian or it's computer generated.
Yeah. I don't think there's anything that pretty in Vegas.
Nah, I mean, I imagine not. They certainly wouldn't let you or I into something this pretty.
No, definitely not.
But yeah, WYNN, this is their pandemic crash low down here. They pulled back to below 100. But they're still not approaching that same level that they were at back in the depths of that March 2020 low. Man, those candles, it gets me every time. Same thing, obviously drop off in revenue. It started to pick back up a little bit. Unfortunately, before this whole Delta variant scare started taking off a little bit. Here's some of their shares outstanding. They did issue a little bit of shares last year to help kind of survive. They didn't have to take on a whole bunch of debt, though. It looks like they were still able to pay down some of their debt during the past year or so. They took on a little bit, but nothing too crazy. So they're one that I'm actually going to do that calculation for as well, because I want to dive a little bit deeper into them.
If you compare like the three you just did, WYNN, CCL, LUV, it looks like CCL fared kind of by far the worst when you look at the amount of shares, because that share offering at $8, they did like two more after that too. Yeah. But just looking at those graphs, CCL looks the least attractive.
Yeah, exactly. That's what I was kind of trying to do here, is to give you like a real superficial kind of view of like which stocks merit kind of doing a deeper dive on. I thought it was going to be Carnival. That's why I ran the numbers on them, and it turned out not to be. Personally, for myself individually, because I'm looking to trying to invest more capital here, is that I'm going to be doing the deeper dive math on these other companies. WYNN is probably the one that's most appealing to me. Las Vegas Sands a little bit too. I kind of want to look at both of them and kind of look also at their distribution, because casino stocks, you also have to think about like where are they in the world. Las Vegas Sands is a little bit more confined to Vegas, whereas when you look at WYNN, you're getting a more kind of international, because they have some exposure to Macau. They have one here in Massachusetts, the Boston area. So definitely some thought process there. We'll have to go into that as well. That was not something I'm doing at this point. If you guys are interested, we can do a separate video on any of one of these stocks, get a little bit deeper dive. Yeah,
just throw it into the comments, whichever one you want. That's Vinny's bread and butter. He's great at that.
Yeah, I love it. But I stumbled upon this too, and I thought this was going to be interesting when I was telling Dylan. Dylan and I, if you haven't seen our stimulus check challenge series, we're competing, trying to grow like a $1,400 stimulus check the most in a year to see who can win. Spoiler alert, at the exact moment, I'm in the lead. But
just to be clear, we're also doing stuff within the Stim Challenge that is not anything you should ever do in your account. I'm being stupid. Like, I'm just putting all my stuff on calls for the week. Like, I my graph went from 700 to 2,100 to 1,000. Like, it's ridiculous.
Yeah. Yeah, mine's been more perseverating.
Yeah.
But this is one I thought would be a great opportunity here is picking up this JETS ETF. Maybe some call options on the JETS ETF that expire kind of later on this year. You could certainly get a nice like bounce as the whole Delta variant fear kind of tapers off a little bit. So I think that would be a good one. And you don't have to go through an individual company and pick an individual stock. You just have to kind of worry about this is going to be more of a macro indicator as Delta variant, kind of fears trade off and people are traveling a little bit more frequently. Southwest just warned this week that they saw that their bookings in August started to drop off. They attributed it to fear of the Delta variant. But if you get any opposite headlines, I think that this JETS ETF would be a great play there. These are the holdings of the JETS ETF as of August 6th, very much focused on the United States. So like I think it was 70%, or was it US allocation, but also some international exposure too. But like I said,
yeah, I mean, 40% are the big four airlines here.
Yeah, it's definitely heavily weighted towards the United States air travel. So definitely an interesting little play, I thought. But yeah, that's pretty much what the whole point of this video was to do a deeper dive in terms of showing you how you can compare the pre-pandemic to post-pandemic company in terms of valuation, and also give you some ideas of some companies that may merit a little bit of a deeper dive. Certainly, if you guys are interested, let us know down in the comments below. We'd be happy to do a video about one of these. Like I said, I think the casino ones are the ones I'm probably looking at the most. They're also a little bit of a thought process there with potential increase in the kind of Social Security income for senior citizens next year. So you could also potentially be ahead of that trend. I'm not sure if, unfortunately, they don't have great demographic data on which casinos are kind of patronized by age. So we'll see. But it's definitely another interesting wrinkle that could be brought into this.
I will say before this video, I was really liking CCL, and then after this video, I'm really not liking CCL. I'm liking WYNN more. So.
Yeah.
Yeah.
Same. I'm probably going to do the WYNN a deep dive. Whether or not it becomes a YouTube video will be depending on whether or not people want to see it. But I'm probably going to do the math at least there.
Got it.
All right. See you guys in the next one.
Have a good one.